With up to 2.2 million Canadians having their mortgages coming up for renewal over the next 2 years, how is this going to affect the market? Well, according to Canadians themselves, 58% are concerned. The reason being is that many of these individuals got interest rates that were far lower than they're going to be when they renew. And for many, this could mean about a 30 to 40% increase in monthly payments. So is this the beginning of the end for the Canadian real estate market? Before we answer that, we're going to take a little dive into the data to see what it has to say. So here we have an article from RATESDOTCA. 58% of homeowners are concerned about mortgage renewals, but more now have a plan. So let's see what they mean by that. Basically, they had the exact same survey last year in July, I believe. Yes, right here, July of 2023, and 62% actually had these similar views, but it's come down since then. So essentially it says, for mortgage holders, the roller coaster ride of mortgage interest rates continue. Many Canadians who looked into fixed mortgages when interest rates were historically low now seeing the effect of the Bank of Canada's 10 interest rate hikes. So as many of you know, the Bank of Canada went absolutely insane with their interest rate hikes, raising the interest rates by over 4%. In the first 6 months of last year, the Canadian Mortgage and Housing Corporation estimated that 290,000 homeowners renewed their mortgage at a higher rate, which was 5.45% a year for a fixed rate and 7.38% for a variable rate. That would have been a pretty steep variable rate to get into, but some people that are betting on the Bank of Canada lowering rates may have got into that. And over the next 2 years, a further 2.2 million mortgages, as I mentioned, will be coming up for renewal at higher rates than they previously had. So according to the Leisure study conducted on behalf of RATESDOTCA and BNN Bloomberg, over half of Canadian homeowners are concerned about their mortgage payments upon renewal, echoing the concerns felt in similar surveys, which was July of 2023, as I mentioned, at 62%, and October of 2022 at 53%. So perhaps because of that, homeowners are continuing to make some hard financial decisions to compensate for these higher payments, either by decreasing discretionary spending or eating into their savings. So if people do know that they're coming up for renewal, I'm hoping that the majority of them have some sort of plan and they're putting money away, because if you know it's coming, you should obviously prepare for it. But I think that's going to be one of the biggest challenges, but we will get to that in a minute. So what's the damage? It depends on when you took out the mortgage. So 3/5 or 58% of homeowners are concerned, as we mentioned, when they have to renew. When compared to survey results, this was lower, as already mentioned, and those who are concerned about higher mortgage rates are likely to be in the age group of 18 to 34, like myself, so 73%, and 35 to 54 at 67%. So the statement made here, of course people are concerned, says Stephen Balgobind, a mortgage insurance agent with Get In It Financial Group. However, there's a misnomer that as mortgage rates doubled, people think that mortgage payments will also double, which is not true, not even close actually. So thankfully, the situation is much less dire. To illustrate, a study from Zoocasa found that the GTA, those who took out a 5-year mortgage in 2020 can expect to see their monthly payments increase to about $4,500 from the original $3,400. So it's $1,100. It's a lot of money, don't get me wrong, but not even close to doubling that number. That's a monthly increase of $1,100. However, those who took out a mortgage in 2018 can expect to see an increase of only $257 of their average monthly payments, not as significant. If you pay down your mortgage over the past 5 years, the mortgage amount of $500,000 will probably have down a good $50,000, Balgobind adds. Now, if you do the math, you will probably be paying a little more when you renew at today's rate. So we have to think about that as well. And are they actually refinancing or renewing, which is one of the important things to consider. So moving on, homeowners who have created equity are more likely not to be concerned. On the flip side, 39% are not concerned about high payments. This matches similar trends reported in July of 2023 and October of 2022 at 35 and 44%. It's also worth noting that the percentage of those who are not concerned at all about the increasing financial squeeze has increased from 17% in July of 2023 to 21% now. So that's an interesting stat. Among the respondents who stated they're not concerned, 53% are likely to be older than 55 and more likely to be living in suburban rural areas. That's 43 and 44%. By comparison, only 32% of urban residents say they're not concerned. So that is one of the interesting takes that I would like to see put into these numbers, is how big is people's mortgage, right? From the last numbers I saw, the average mortgage across Canada is right around $400,000. So yes, of course, there's people with massive mortgages of $1 million and whatnot, but there's also a ton of Canadians, and especially in some of the bigger cities where you may not expect it, that don't have a mortgage whatsoever. I believe the last number in Vancouver was close to 50%. So we have to take those people into account. At the end of the day, there's always going to be people in trouble, but what is the majority? How is that affecting the larger group of people as a whole? So how Canadian homeowners are paying for their higher mortgage payments. More than half, 57% of respondents, have a plan to meet these additional expenses, which is consistent with the previous 2 surveys. Understandably, those who are concerned about higher payments are much more likely to have a plan, which you'd hope, because hope isn't a plan. When compared to those who are not, 77 versus 30%, and are more likely to be under the age of 55. So, of the respondents who have a plan, 39% plan on decreasing spending in other areas, 10% plan on using their savings, 5% plan on taking on debt, and a further 3% plan on selling their home. So of course, the big number we want to pay attention to here is the 3% selling their homes. However, something to note here is that if we do see some sort of a flood of inventory come onto the housing market, of course, this will put downward pressure on prices, but we would need to see quite a bit actually coming on. And do the 3% of these people actually do so? Who knows? It's a survey. We'll have to wait and see. But even if it is a small percentage who put their homes on the market right now, at least in my market, we have a pretty strong market. Could that change? Of course. But the biggest thing right now is the lack of inventory. If we see the massive influx of inventory, 100% we're going to see some sort of a decline. But if it's just a few of these properties that are coming onto the market, just like other properties, they're not going to have a problem. They're probably going to be able to downsize or move out of the province or city or whatever their plan is in order to reduce their monthly payments. So now that we've actually taken a little bit of a deeper look into that, should we be concerned about the future of the Canadian housing market? Well, the first thing I want to bring up is that this is a survey. It's about how people feel, not about the actual financial situation that they're going to be in. And in general, this typically doesn't line up. Because what the data actually shows, the Canadians are some of the best in the world at paying their mortgage. They will literally sacrifice almost everything else before they miss making one of those payments. And I think over the past couple of years, a lot of people have kind of changed their lifestyles and they've gotten very comfortable and they don't want to change them back to make sacrifices and not do some of the things or spend some of the money that they currently are. But unfortunately, that's just what has to happen for many. And as I said, I think people have just gotten a little too comfortable. Maybe that means not going out of the country for a family vacation or buying premium brands or going out for food every other day. Because these are luxuries. They're not things that we're entitled to. And when you actually break down the numbers and look at when these people were qualifying for those mortgages, they had to qualify at a minimum of 5.25% due to the stress test. And right now, people who are renewing, if they're looking at a fixed rate, rates are somewhere in the 5 to 5.2% range on average. Now, if they're looking to get a variable, it'll be a little bit higher, but just looking solely, if they take that fixed rate and based off of what the stress test was, it'll be tougher, but they should be okay. Of course, there's so many other circumstances and things that changed in your life. And of course, the cost of basically everything has gone up as well. But it's hard to think that when you take all these things into account and you make some lifestyle changes and some sacrifices, that you're not going to be able to get by. It's definitely going to be more difficult. I'm not saying that. I've already personally been in that situation. When I purchased my place, I got a 1.55% variable interest rate, and right now I'm at over 6.5%. So I'm already feeling that pain. But guess what? I've adapted and made changes in order to deal with the excess payments. Don't get me wrong, I do empathize for everybody out there who it is extremely difficult for and whose life circumstances have changed. But I do believe for the large majority of people, they can make these changes and they just don't want to. Getting back to the primary focus of this video is, are we going to see some sort of a housing crash? And in my personal opinion, no. We've already seen the resilience of this market throughout the entire time that rates have risen. And I know many people are going to say, well, we haven't actually felt the full impact of these rates, and that may be true, at least to some extent. But with rates expected to start coming down towards the middle or end of this year, with a decrease between 0.75 and 1%, some experts are predicting even higher. Either way, I think we are more or less out of the worst part of it. However, there's so many other things that could happen, but if things continue on this trajectory, I think we're all going to be fine. An additional point I'd like to make is the fact that when people are renewing their mortgages, they're not having to qualify again. That's only if you're purchasing a new property, getting a new mortgage, or refinancing. So yes, the payments will change, but it's not like people are just not able to qualify for the house that they're already living in. And I think a lot of people don't fully understand this. And again, that adds into the fear that I think shows up in this study that some people have due to the fact that there is a bit of a lack of education. Honestly, it's not your fault, but you should definitely be speaking with a qualified mortgage broker, not just rate shopping, going to the bank, whatever that may be. Have somebody in your corner who's going to prepare you for these situations. But I digress. That is a conversation for another video. But who am I to say what's going to happen? I'd love to hear your thoughts. Did I get it completely wrong? Are we headed for the inevitable crash? Or is the market going to continue trending upwards as it has for the first month of the year? Let me know down in the comments. And if 2024 is the year that you're looking to buy or sell in Surrey, Langley, or the rest of the Fraser Valley, or you just want to chat about real estate, you can scroll down and hit the first link in the description to book a call with me at a time that works best for you. And before you get out of here, if you got any sort of value whatsoever from this video, all I ask is that you hit the like button. If you want to see more just like this one, as well as community tours across the Lower Mainland, I suggest you consider subscribing to our channel. Thanks so much for watching, and we'll see you in the next video.